Welcome, ladies and gentlemen, to Commodity TV, a new episode of our online interview series. We want to get an update from IsoEnergy, and here with us is the CEO, Phil Williams. Phil, good morning. How are you?
Good morning, Jochen. I'm well. How are you doing?
Perfect. Thank you very much. I mean, the last 3 months, 4 months were a little bit tough because we saw corrections up to, I think, 50, 60% in good uranium stocks, even in companies which became producers lately. Also, you got a little hit, I would say. And it makes to me absolutely no sense because we are living in the best world for uranium ever, as I see it. Deficits are not diminishing, supply is not rising, demand is rising on 2 to 3% per annum. And now Mr. Putin yesterday said, oh, guys, we are very sorry about that sanctions from the West. So we will limit export of uranium, titanium, and nickel. Is Mr. Putin the catalyst to get the thing started?
I mean, certainly seems like it, but I think you're right. Look, uranium has been extremely volatile. It's like being on a roller coaster ride,
Yeah.
and and but the underpinning fundamental story, as you point out, is as strong as ever. And to illustrate it, last week I was in London for the World Nuclear Association conference,
Hmm.
and it's the annual time where the buyers and the sellers get together and talk about the future of the market. And it was very positive,
Hmm.
particularly for demand. And you point out next year will be the largest nuclear power year in the history of the world, and so that sounds pretty good. That's pretty positive. And at the same time, notwithstanding there are some more new producers coming on, there's still not a lot of supply on the horizon
Hmm.
to meet this anticipated demand. So generally, everyone was feeling pretty good about the market, the uranium market, notwithstanding the equity markets
Hmm.
being quite painful. But then yesterday, to what you're talking about, we have this sort of thing out of left field, and that's what really seems to happen a lot in the uranium space. Something comes in that you don't expect, and actually, we were talking last week. We were saying, what's going to be the catalyst for the space? These stocks are oversold. The fundamentals are too good. There's only one direction that everything can go. But what's going to be the catalyst? And nobody knew. And then lo and behold, yesterday we have Putin come out. And listen, there wasn't a policy decision. He didn't come out with an official
Hmm.
program of here's exactly what we're going to do and when. But I think what it did is it highlighted this issue that we have with supply, and really, started to get everyone thinking, wow, the risk is still there
Hmm.
around Russia, around what, and it's uranium now is in focus. It's been enrichment before. That's the thing that everyone's worried about because Russia has, the most enrichment capacity in the world. But they're also, by the way, I think it's the sixth or the seventh largest producer of uranium every year. So if they start to pull back on exports to Western countries, that material has to come from somewhere else. So it was an unforeseen catalyst, but certainly a catalyst. You can see it in the equity markets, and really the equities are just doing what they should have done anyway, based on the fundamentals.
Exactly, going up. That's what we want to see. Yeah, and I mean to put that into some numbers. I was just reading about that stuff. 27% of the in all enriched uranium comes from Russia to America. So
Yeah,
that looks to me like
yeah.
there might be a problem.
Well, no, and the problem was already illustrated by the ban on Russian fuel that the
Yep.
U.S. put in earlier this year. Now, that was one of these things where it was a big catalyst, and all the particularly the U.S. stocks got a lot of attention on that basis. But then, as we sort of unpacked what was behind that, it's the ban doesn't come in until 2028, so there's some time for the utilities to find alternate sources, and they can still rely on that. But that's a lot of material coming out of Russia. And
Hmm.
again, at that time, we always thought one of the things that Russia could do is when the sanctions were put against them, they might do reverse sanctions, which is what he's talking about yesterday. We're not going to sell you our enrichment. We're not going to sell you our uranium. And then we're in a difficult position. And really, it just means that prices have to go significantly higher.
Yeah. So for me, the major question is why are utilities still waiting with contracting? I mean, we have now 2024, we are entering, yeah, the absolutely low in the cycle. That means everything is done by the end of the year. And 2025, they definitely have to restart to do new contracts. But it looks to me like, why have they not started already at 50 or
Yeah.
$60? It makes no sense to me.
So
And
it, yeah.
if we go back to 2004 to 2007, it was exactly the same situation. They waited until they were dead.
Yeah, listen, it's a head scratcher for sure.
Yeah.
And what's going to happen? It's going to be violent when they're going to come in en masse to contract because they're not contracting nearly enough, and you're entirely right about that. And when they come, it's going to be the floodgates are going to open seasonally. And was looking at found an interesting chart just yesterday. Seasonally, end of September, October are the best months for uranium prices, going back to 1997. I think we're set up for the exact same thing. It could be a very fun next couple of months.
Yeah, me too. My feeling is, to be honest, I see $110 to $120 by Christmas in the spot market, and next year I see 150 plus. That's how I see it.
It's not unrealistic at all. I mean, we're not in the business of forecasting. I'll leave that
Nope.
to you, but
Yeah, I'm allowed to.
I believe directionally you're entirely right. What the numbers are going to be, I don't know, but certainly higher than
Yeah,
where we are today.
that's right. Let's put it that way. If I'm the same correct as I was in gold the last years, then I'm right.
Yes,
Okay,
I would love
let's talk about some really, really exciting, I must say. And this is why I'm also a shareholder of your company. Um, you have reopened the Underground and Initiatives Comprehensive Work Program for the Tony M mine in Utah. So that means you are on the path to become a producer. So how is it going there? Also, what is that going with only with Tony M? I think Rim and Danaros are also two potential mines which could really restart soon. So give us some insights to that, please.
Yeah, look, it's going really well, Jochen. So we opened up the portal, and again, just to remind people, what we have in the United States, those mines, Tony M, Rim, and Daenerys, they were in production in the past, in that bull market of '06, '07, '08, shut down due to low prices. But what that means is fully built mines, all the infrastructure, all the capital is behind us. So low capital, low cost to bring them back into production. And we get the benefit from all the money that was spent on them in the past. Also, all the permits are in place. So the step one with Tony M was opening up the portal, going back underground. There's 18 miles of underground development, lots of ore faces to access. We sent our teams in, and we were very positively happy with what we saw underground. You don't know, it's been over 10 years since were inside the mine. So you don't know what the conditions of the mine in. It's in almost pristine condition. In fact, we're having an analyst trip there this week where there'll be lots of pictures on our website, on social media. We'll
Mhm.
send you some that you can see
Please,
the
please.
condition of the underground. It's in great condition. So that's excellent. And now what we're doing as part of this program is we're mapping and sampling and basically putting together a plan of where are we going to mine first, where are we going to mine second, where are we going to mine third, and we'll be coming back to the market towards the latter half of the year to say this is the plan, and we'll be in production in 2025.
2025, second half, first half.
First half.
Wow. Okay.
First half. I mean, listen, that's all things being equal. If the prices are where you say they're going to be,
Yeah.
we'll absolutely be in production in the first half. As you know, we have a partnership with Energy Fuels.
Yep.
They're one of our biggest shareholders. We have a toll milling agreement to send our ore to their White Mesa mill, and that mill is still in the process of ramping up and turning back on. And so, first half of next year is very realistic time frame for us. All things being equal.
Yeah. Okay, maybe a forward-looking statement because I love to have your ideas. Or it's all theoretically, but what do you think you at what cost level you could produce? Approximately plus minus $5. That's not a problem. And what amount do you think you can do now in the, let's call it, ramp up phase? And once maybe in the next 12 to 18 months is when you are, let's call it, commercial production, what could be the output from that mine, from that one mine?
Sure. Listen, Let me start with the second part of your question first in terms of production rates. And what I'm going to do is I'm going to quote you production rates that these mines did in the past. And that's a beautiful thing about having mines that were in operation. You
Of
know what
course.
they're capable of doing in terms of production rates. So at Tony M, the target is based on historic production rates, somewhere between 500 and 750,000 pounds of
Hmm.
uranium per year. And at
Okay.
Daneros and Rim, it would be 200 to 250,000 pounds a year. So if you
Hmm.
take them all together, we could do about 1 million to 1,000,025 pounds of uranium per year. Of course, we're going to stage these. We're going to sequence these mines in. So
Of
Tony M will
course.
go first, and then we'll bring on the other mines after that. So it will take us some time to reach that level of production. But that's the target level that we can achieve, which I think is it's not as large as next gen, for example, but it's certainly a significant amount of production in the United States. It's not that far away from where the leaders in the United
Yeah.
States, our peer group, the kinds of production rates that they're going to produce. In terms of cost, honestly, it's a bit too early to say. I will say though, these are conventional mines. These are higher cost mines, but they will certainly be very profitable at $100, $110, $120, where you think prices are going to go.
Okay. So could we say that something like, let's say to be conservative, $60 a pound could be something which could be in the reach
Yeah, look, I think it's
in the
probably
cost?
in the 60s, so it could be
Mhm.
60 to $70 per pound. Again, our plan is as part of that study, we're going to put out at the end of the year. We're going to give you specific
Yeah.
economics around what we expect mining costs to be. One of the you know things about this industry is costs are rising across the board. The cost curve for uranium is gone up across the
Hmm.
board, and even in Kazakhstan, for example, and it's not direct cost. Well, sulfuric acid costs are probably higher, but also increased taxes that they're going to achieve there. The entire cost curve is increased, and everyone's going to have to get used to that, including the utilities, of course.
Yeah, absolutely. Yeah, so that means that you will, yeah, make cash flow from next year onwards. And if I go to 2026, that could be really significant because if you would produce 1 million pounds, let's stay with the $60 cost. At $120, you would make $60 million pre-tax, which is, I would say, not too bad,
Yeah, well,
right?
that's not too bad, and that's just the start. That's just the
Yeah,
beginning
exactly.
of the portfolio of assets that we have in the company.
Yeah. Okay. Super. Then let's move forward because you have generated 6 new high priority drill targets at La Roque East project because you did end surveys. So how does it look like? What are the next drill programs there? And yeah, I mean, that's a hurricane project that would be also possibly a production scenario for the future, right?
No, absolutely. So look, let's take a small step back. So we have the Hurricane resource, the highest grade project in the world, almost 50 million pounds at 34.5% uranium, staggering grades. That project, that resource was discovered at the very edge of the property boundary, and over the boundary, as you know, is a project owned by Cameco and Orano. They're drilling the extension of that ore body.
Hmm.
We have over 10 kilometers of prospective strike of the conductive corridor on our 100% owned property to the east of the resource. And last year we employed this new technique you mentioned, ANT, which stands for ambient noise tomography, to try to identify areas on that 10 kilometers that would be prospective for other pods of mineralization. What we did, the first thing we did is we ran the survey over Hurricane, and it showed us a signature around that deposit. We've now conducted those surveys on that over 10 kilometers of
Hmm.
strike. We found similar signatures in multiple areas. And so we started drilling those areas this summer, and we've recently completed the drill program. We will have a press release out on the preliminary results shortly. But in those areas, we're finding rocks that are very similar to the rocks that are around Hurricane. So we're in the right areas, and the one thing to highlight is that we're looking for the proverbial needle in a haystack. These are the ore bodies at this grade are very small,
Hmm.
located several hundred meters below surface. So
Hmm.
you're really trying to find, as I said, a needle in a haystack, and it's about persistence of drilling. But what we can tell you from the work that we've done is we're finding, as I said, very similar rocks to those rocks found around a known deposit, Hurricane. So we're very
Okay.
encouraged, and we'll be processing all the data that we've received, all the information, and coming back with another aggressive drill program for the winter.
Okay, super. So would that be then a possibility that you spend together with Cameco maybe in the future? Because I could imagine the development of such a project is, yeah, in the hundreds of millions, maybe $1 billion, right?
Yeah, look, I think that probably makes a lot of sense. I mean, when you look at the ore body, the center of the ore body crosses the property boundary. It probably makes a lot of sense for both sides to be developed together. And as you say, there's quite a lot of capital to build a conventional mine in the Athabasca Basin, and it'd be better to use that capital over a larger ore body.
Hmm.
The key to figuring that out is really going to be understanding what they have, what Cameco and Orano have on their side of the border. They've done a very aggressive drill program this year. We can see it. We literally stand at our property border and can watch their drills turning. They're turning right on the property line. What we don't know is what they have in terms of resources on their side. We're speculating now, but every year Cameco puts out an annual resource statement that is as at the 31st of December. And our guess is that based on the amount of work we've seen them doing on their side, they should be in a position to put out a resource at the end, but for the end of this year. They usually publish
Hmm.
that in about February. So we'll wait and see. But again, just based on what we can see visually in terms of how much drilling they've done, the extent,
Hmm.
we think they probably have more on their side than we do.
Wow, okay, so that makes definitely sense to do something here. Okay, super. But one question I forgot to ask you, because we were just talking about costs to develop a project. We were talking about Tony M, Rim, and Danaros. Can you finance that out of your cash? Because I think you still have something like 45, $50 million in the bank.
Yeah, we have over $40 million, and I said there isn't a lot of capital costs. There are no big capital projects to
Yeah.
restart these mines. It's working capital. We're hiring contract miners. They're going to come in and mine the ore, send it to the mill. So there's a delay between spending the cost to mine and then recovering the cash from
Hmm.
selling the finished product, the yellow cake. And it's really just a working capital thing. We can absolutely finance it on our current balance sheet.
Absolutely perfect. So then, last question: what's your biggest wish until Christmas? What do you want to achieve?
Well, listen, I think it's getting Tony M ready to restart mining. I mean, this is really the fun part of this business is getting back into mining, particularly in a rising price environment. So for Christmas, I'd like to go down to Tony M, put my hand on the ore face, at the same time watch uranium go through $100.
Hey, that's a great plan. I love that. Okay, super. Phil, thank you very much. That sounds all great. I know why I'm a shareholder, because I see a lot of potential in your stock. And honestly, my next price target is closer to 5, 6 Canadian dollars. And in the longer term, I see well $8 to $9. So from that perspective, all is fine. Your company is well financed. You have fantastic shareholders. You have yeah, fantastic team, and you go in production. What else do we want? That's how it works. Phil, thank you very much, and I wish you all the best.
Yeah, thanks so much, Joachim. Great talking as usual.
Thank you. Yeah, ladies and gentlemen, that was Phil Williams, the CEO of IsoEnergy. And you know, I'm a total uranium bull. And honestly, what happened yesterday with Mr. Putin, I think that could be the ignition now, really, that this uranium market starts. We suffered a lot the last 3, 4 months, which made to me absolutely no sense. And IsoEnergy is one of the top companies in our portfolio, also in my portfolio, of course, which I really own and I really will hold, because you have the production scenario, which is now starting, really, yeah, meaning with next year production. You have 3 small mines, but also fantastic, not a large capex. They have contract miners, and they work together with Energy Fuels here with the White Mesa mill. So from the capex side, this is really makeable, as the company has well over $40 million in the bank. So you are not facing further big dilution here. And on the other side, they have the Hurricane project, the highest grade project in the world, which could be maybe in the future something together with Cameco. So you have a lot of upside potential. And if you are not yet invested in uranium, make sure you have some ISO Energy shares. I do. So let's make some money here. Thanks for watching us, and bye bye from Switzerland.